We're going to talk about a few things. Number one, we're going to look back at the quarterly and monthly strength stories and weakness stories to get what I believe, at least for the near future, is going to be the best watch list in terms of contrast. Now, contrast is a term we'll cover again in this episode. It's something that we've talked a lot about in previous episodes. And, oh, the world's most handsome cat has entered the room. All right, so do I need to introduce you guys to the world's most handsome cat? I can't resist him. So, all right, world's most handsome cat, yes. Anyway, I want to go back to having your, anyway, he's a Forex trader too. I mean, and he doesn't even have thumbs. All right, so taking a look at what we've got going on in the markets. All right, now if you do have questions, let me know, type them in. I can see the chat window here, and let's start it off with what contrast is. And we'll talk about strength and weakness stories, how we're going to use the contrast to build those watch lists. And let me also mention this. We'll talk about contrast and time frame versus time horizon, okay? Contrast, time frame, time horizon. So first of all, what's contrast? Unlike other types of tradings where trading types or trading markets, relative outperformance is always important. Let me use an example. Right now, we're looking at the NASDAQ futures. Let's use the futures, for example. And within the NASDAQ futures are 100 stocks. Now, they're weighted differently. Some stocks are much heavier weighted than others, but they're all part of this unit we call the NASDAQ 100 futures. Now, within those 100 stocks, some are going to be weak, right? Even though they're part of the NASDAQ 100, which has just been going straight up, some of them are going to be weak, some of them are going to be sideways, and some of them are going to be even stronger than the NASDAQ itself. Relative outperformance, I look at both to the downside and to the upside, meaning if I'm looking at a market and I want to see something outperforming, it could be the weakest, sort of best of breed for shorts, and it could be the strength, the strongest best of breed for buys. Okay, so with that being said, contrast in terms of stocks and futures wouldn't really be necessarily buying the strongest, selling the weakness. I mean, you could do that, but they really don't have a relationship to each other. I mean, they do in terms of them being part of your trading book, but they won't to each other. Take that same idea, relative outperformance in terms of strength, relative outperformance in terms of weakness. Now think about the fact that when you're Forex trading, they are pitted against each other. It's an exchange rate between two currencies. So contrast, when we kind of take this idea of relative outperformance and fast forward into the Forex markets, because we are looking at two currencies against each other, preferably that have the best chance for a trend, that means I want to buy the strongest currency and sell the weakest against each other. That's the pre-made, pre-packaged Forex pair, okay? I say pre-packaged because you always have to trade them in a specific order. We'll talk about that in this video too. Hey there, Paul, how are you? Good to see you. All right, so the last quarter, and of course you guys know I have my handy dandy notes. So the last quarter, the strongest currencies have been the Australian dollar and the New Zealand dollar, which is the same conversation we had last week. That's persisting, that's been consistent. And the weakest currencies are the US dollar and the Japanese yen, which isn't that surprising considering the US dollar has been under a lot of pressure as of late, and the stock market's been going higher, so the yen's been weaker. That's kind of an interesting relationship. We'll talk a little bit about the Aussie yen because they end up being part of our watch list. So the last quarter, that's been your contrast. Strength in Aussie and New Zealand dollar, weakness in US dollar and Japanese yen. The last month, going back the last month, so a month back from today, not month to date, but 30 days back. The strongest currencies have been the New Zealand dollar and the Swiss franc. Now a word about the Swiss franc. The Swiss National Bank is very secretive. They don't say much. They don't have a lot of public comments. There's not even a lot of data that gets discussed about the economy of Switzerland. And the Swiss National Bank categorically hates a strong franc. They hate it. So if I'm ever going to be in an overnight or longer term position in the franc, it's got to be short. I haven't really preferred to be long franc ever in my career because you realize the Swiss, again, will typically not give a lot of warning about sudden monetary policy changes or even comments about how much they hate the franc is strong. So let's not get caught up in that market specifically to the long side. So even though the last month shows New Zealand dollar and Swiss franc strength, avoid it, all right? It also shows Canadian dollar and pound weakness. So the last month we've seen the Canadian dollar emerge as a weakness story in this contrast conversation and pound. Now, I mentioned I talk about time horizon and time frame. Time horizon, the way I use the terminology, the jargon, time horizon is how long do I think it's going to take something to happen? A common time horizon can be understanding that, say, a contract, futures contract is going to expire, or the time horizon from when you've gotten into the first notice date. Another way to look at time horizon would be this current session. It could be the US trading session. It could be the Asian trading session. It could be the European trading sessions. That trading session could be a time horizon. It's a span of time. And then another way of looking at time horizon could be time to expiration of an option, futures option, ETF stock, time horizon. So time horizon typically sort of insinuates that you're looking for a certain something, strength, weakness, price target, to happen by a certain date. Time horizon is very much about the calendar or the clock. You know, you're expecting something to happen by a specified or expected time or date. Time frame has more to do with the chart that you're looking at. So if I'm day trading, my time frame is, say, a 1 or 5 minute chart, each candle representing 1 or 5 minutes. My time horizon might be that particular session. Maybe it's a European session, maybe it's a US session, but it's that particular session. All right, so time frame versus time horizon. The time frames that I'm referring to when I'm talking about a quarterly or a monthly look back of contrast is going to be a daily time frame, maybe a 480-minute time frame, but it's going to be of the longer variety. So not only does each candle on my chart represent a longer span of time, either 480 minutes or full day, daily, whole session, 1440 minutes if you want to look at it that way. Not only am I looking at a longer period of time frame, but if I'm looking at a longer time frame, my time horizon is also much larger too. I'm not looking to get in and get out that day. Maybe a few days, maybe a few weeks. I've had positions on daily time frames that have lasted a few months. So your time horizon is in many ways married to your time frame. My time horizon really can't be that lengthy when I'm looking at a 1 or a 5 minute chart. It can be and will be and should be longer when I'm looking at a 480 or a daily. All right. So one thing you can ask yourself is, Rog, I don't want to be exposed to a market for days or weeks or months. Shorten your time frame. Shorten your time frame. Don't artificially shorten your time horizon. So the pairs I'm talking about are daily time frames that are typically going to have a much longer time horizon in terms of my willingness to hold on to them and my expectation for follow through. All right, so let's talk about a few pairs. We already talked about the fact that I don't want you really committing longer term time horizon wise on long franc positions. So even though it's a strength story right now, I by and large avoid it. The pound versus Australian dollar is in a zone right now on the daily time frame that I think is worth taking a quick peek at because it's pulling back into the 34 exponential moving average on the high. And that's the beginning, the very upper ends of my 34 EMA wave. Hey there, Charles. Good morning. Good to see you. Thanks for joining us. Appreciate that. All right. So the pound versus Australian dollar is one I would actually, when this episode's over, go take a look on the daily time frame at that pair. The other one I would look at is the Aussie versus Japanese yen. So I need to take another quick pit stop in understanding what's happening in the larger futures contracts in the indices. There's a lot of expectation for weakness. I do not subscribe to it. I think that picking tops in this environment is playing not only against sort of the political powers that be, but also against the Federal Reserve. I think that we're in an asset bubble. And even though there will be certain days that the market may pull back and it may correct the Aussie yen with it, while I welcome those days, I will not short on those days. In fact, I've sent out to the membership on the futures side, and it also reflects in the types of trades that I'm taking on the Forex side. And by the way, if you're ready to take a deep dive into Forex, check out what we're doing. In fact, today we're going to have some updates, video updates, and trade updates and watch list updates in the Forex Mastery. So the timing would be good because we're just sort of starting a new page, and that's at simplertrading.com/FX. All right, so the Aussie yen is a trade that I like to the long side. As we talked about earlier, for the quarter, the Australian dollar is one of the strength stories. Because the stock market is in such a strong uptrend, the yen is weak. The Aussie yen is strong. Don't get caught up in the whole cross rate thing and the whole carry trade thing. For those of you that don't know what a carry trade is, it's just a type of reasoning to put on a trade based upon the interest rate differences between the two central banks of the currency. So Aussie yen, for example, what is the central bank difference between the Reserve Bank of Australia and the Bank of Japan? That chasm, that interest rate difference, is what would either make the carry trade something you want, if it's a wide interest rate difference, or something you don't want if it's a narrow interest rate difference. So I don't believe the carry has been alive and well for some time. The expectations that the Aussie yen will reflect what's happening in the broader averages, that hasn't gone anywhere. But the justification of the carry being the reason, that's been gone ever since central banks have been lowering and lowering and lowering interest rates. Okay. All right. But I like the Aussie yen to the long side. And I feel comfortable with that because if we get a pullback in the broader averages and the Aussie yen goes down with it, terrific. We get a great buy on a retracement of the uptrend. On the other hand, if we don't get it, and I don't suspect we're going to have big sell-offs. I mean, if we were going to see that, I think we would have seen that either at the end of June or we would have seen that yesterday. We still have some time today for the market to potentially put in the lows that it tends to put in the week before options expiration. I mean, some of these index futures and stock movement, if some of that is going to affect the yen and the Australian dollar, which are very sensitive to stocks. So again, I like the Aussie yen, and I'm not that concerned about this massive reversal, perhaps, in the equity markets or even a prolonged period of weakness. Eventually we will. I don't think now is the time. All right. So the other market I would tell you to take a look at is the Australian dollar versus US dollar. Now, this one's a little painful because I still am a believer that the US dollar will continue to be a strength story. It's just been in a bit of a season of weakness. So we'll trade it short term. And you want to trade it against the strongest currencies out there, which would be the Australian dollar and the New Zealand dollar. Yes, the franc is strong, but again, we don't like franc strength trades. So I would focus on, right now, the Aussie versus US is sitting at the 13-period exponential moving average. Check it out. Again, time frame, daily. Time horizon, days, if not potentially weeks. As long as that Australian dollar remains strong, US dollar remains weak, and more so as long as the indices, the stock narratives across the world are as bullish as they are. I mean, stocks are flying right now. They're strong. We're in an asset bubble. Yes, we'll pull back from time to time, but we're looking at overall strong equity markets around the world. That's going to benefit Australian dollar, New Zealand dollar. Now, for those of you that are wondering, how come I haven't mentioned Canadian dollar? Look, I'm long crude oil. This is a trade that we've talked about on the futures side for about almost 4 weeks now. And we've been buying pullbacks. But interestingly enough, and this is where a lot of people get the Canadian dollar movement all wrong, Canadian dollar will absolutely be influenced by crude. In fact, the Canadian economy is going to be influenced by the energy sector. But it doesn't mean that the Canadian dollar is tethered to crude. And we're seeing that right now, where about the last month, I've been bullish or long crude, and yet it's the number one weakness story in terms of currencies of the last month, the Canadian dollar. So don't believe that ComDolls are always tethered to their underlying commodity. It's an influence, but there are other influences as well. Sometimes the equity markets and sometimes the central banks of those countries. All right. Question here. If I buy the Australian dollar, Japanese yen, am I long the Aussie and short the yen at the same time? Andrew, terrific question. So what mechanically happens? What is your broker facilitating when you get long the Australian dollar versus Japanese yen? So what's happening is, you're absolutely right. Your broker in the background is at the current market price, buying Aussie, right? Or whatever price you've determined by maybe a limit order or some sort of conditional order. It's buying the Australian dollar, so you have a long position in the Australian dollar, and correct, you have a short position in the Japanese yen. So you're looking to profit, yes, on the trend higher of the Aussie yen, but underneath that, it's a long Aussie, short yen position that's powering that. You got it. You got it. That's exactly what you're doing. That's exactly what you have at the same time. Another way to think about it is you have landed in, I don't know if this is going to be helpful or not, but this is the practicality of foreign exchange. You have basically sold yen and bought Australian dollar, which sounds crazy until you put some physicality behind it. You have landed in Tokyo, left Sydney, Australia, landed in Tokyo, and you've taken your Australian dollars, right? And you've, for example, bought yen. That would be a short Aussie yen. Or you've left Tokyo, landed in Sydney, and you've sold your yen and bought Aussie. That's what you have a position in. You've sold your yen and bought Aussie. You've left Tokyo, you've landed in Sydney, and you've gone to that little plexiglass, within the airport where you slide your currency back and forth, and you slid your yen and you've got Australian dollar in return. So it's always that kind of relationship. So I hope that makes sense. Yes, you've got it, Andrew. Hey there, Mark. Looking good. I appreciate that. As long as my positions are looking good, I'm usually looking good. So I appreciate that. Yeah, eventually I need to start figuring out some lighting and some hair and makeup, but I'm a trader. Yeah, as long as my mouse and my keyboard are working, I'm pretty happy. I appreciate that. You guys have any other questions for me as we wrap up this episode of Forex Friday? I think that's all I've got for you guys. We talked about time horizon, time frame, contrast. Don't get long Swiss franc longer term. Day trading, I don't mind. I don't mind day trading wise. Aussie US, Aussie yen, pound Aussie, take a look at those. And let's stick with those Aussie and New Zealand dollar buys. All right, fantastic. All right, gang, thanks as always for your time, and I'll see you in the next episode. Be good to each other.